Hi, traders and investors. Welcome to our pre-market analysis for the Nifty 50. Let's dive straight into the data from yesterday's close and set up our game plan for the day ahead. This analysis is based on the closing data and key levels from our chart. Coming to introduction or the big picture, first, let's look at where we stand. The Nifty 50 closed at 25,891.20, down about 176 points, a 0.68%. The market sentiment was clearly negative. On the chart, we can see the index broke below the key 26,000 psychological level and is now trading closer to the lower end of its recent range. The immediate takeaway is caution. The bears have control, and our job this morning is to identify the key levels that will dictate whether this selling pressure continues or if the bulls can attempt a recovery. Key support and resistance zones. Now, let's get to the most critical part, the support and resistance zones provided on the chart. These are our roadmaps for the day. Starting with resistance, the path higher is layered. Our first and most immediate hurdle is R1 at 25,968. A move above this could signal a minor bounce. The real test for the bulls begins at the R2 26,038 to R3 26,096 zone. If the market can reclaim this area, it would signal a significant shift in short-term momentum. Beyond that, we have a major supply zone between R6 at 26,270 and the visible high on the chart around 26,400 to 26,500. A move back there would require very strong bullish news. Now, let's talk about support, which is even more critical given the current bearish close. The most immediate support is the previous day's low, which is very close to S1 at 25,788. A break and sustained trade below S1 is a strong bearish signal and could trigger further selling. If S1 breaks, the next target becomes S2 at 25,688. This is a significant level. A break below S2 opens the door for a deeper fall towards S3 at 25,593 and even S4 at 25,535. So, to summarize the zones, bearish zone, below 25,788, S8 neutral, battle zone, between 25,788 S1 and 25,968 R8 bullish zone. Above 25,968 R1 with confirmation above 26,038 R2. Let's get into market sentiment or order flow analysis. Looking at the order flow from the chart, we see a sell level at 25,877.85 and a buy level at the same price. This often indicates a point of equilibrium or a battle line where both sides are active. However, the fact that the index closed at 25,891, just above this level, suggests there might be some initial defense here. But the overall structure is weak. The key question for the open is, will buyers defend the S1 25,788 support, or will sellers overwhelm them and push for a test of lower supports? Traders should watch the opening auction carefully. A gap down open below S1 would be an extremely bearish signal. Conversely, a gap up open above 26,000 would be a surprise and would force us to reassess the bearish short-term bias. Scenarios and trading plan for the day. Let's outline two main scenarios for today. Scenario 1, bearish continuation, higher probability trigger, open and sustain below S1 25,788 action. This is a sell on rise opportunity. Short positions can be considered on a pullback towards the 25,850 to 25,900 zone, with a stop loss above R1 25,968. Targets. First target S2 25,688, then S3 25,593. Scenario 2, bullish reversal, bounce lower probability trigger, hold above S1 25,788 and then break above R1 25,968 action. This would be a buy on deep signal. Look for long entries on a pullback towards the 25,800 to 25,850 support area, with a stop loss below the day's low or S1. Targets. First target R2 26,038, then R3 26,096. Important risk management note, in a volatile pre-market, these levels can shift. Always wait for price action confirmation at the level, don't just preempt the move. Finally, key levels recap or news watch. Let's do a quick recap of the absolute key levels for today. Resistance. 25,968, R1, to 26,038, R2, support, 25,788, S1, Yojak Chinh greater than 25,688, S2, keep an eye on any pre-market news flows, global cues, especially from the US and Asian markets, and any fee, activity data. A negative global cue could amplify the bearish scenario, while a positive surprise could fuel the bounce. Final conclusion, to wrap up, the trend is down, and the burden of proof is on the bulls. Our plan is to trade based on the reaction at the key support level of 25,788. A break below opens up further downsides, while a strong bounce from there could lead to a relief rally. Remember, this is a plan, not a prediction. The market is king, and we will follow its lead. Stay disciplined, manage your risk, and don't force trades. Thank you for watching. If you found this helpful, please like and subscribe. Have a great and profitable trading day.